Alrighty, folks, let's get jumping on in here. Hope you all had a good week. Relatively choppy stuff. I think the next 2 weeks will be exciting, though. So hold me to it, but I think next few weeks got some good upside. So let me just do this here, and then we'll get going in. Let's go to settings here. All right. So a lot of back and forth this week. None of which I think is really concerning. If you look at the volatility index, she behaves nicely, and as long as we're near that 21, should see some smooth sailing here for the market. So you got the low volatility, and then we get squeezes all over the place. So pretty much right now across the board, everything is building up energy in the market. S&P 500 got the daily squeeze, the QQQ, that old triple Q. Where are you? Got a daily squeeze over here. If you look at the small caps, IWM, there be a daily squeeze. If we look at Dow, there's a daily squeeze. And if you look at the individual sector ETFs, XLI, the industrials, there's a daily squeeze. The energy sector, XLE, there be a daily squeeze. The financials got a daily squeeze. The transports got a daily squeeze. The real estate sector has a daily squeeze, and the utility sector has a daily squeeze. So in plain English, everything across the board right now, indexes, individual stocks, individual sectors, they're going through that buildup of energy phase. And that's all the squeeze is. Big, giant buildup of energy. Based on the bullish structure, we have stacked EMAs all over the place. We got really good, solid uptrends. As we go through the buildup of energy phase, we're going to be looking for that energy to get released in the form of a move to the upside. So what I think is going to set the tone here is the daily squeeze of the S&P 500. And over the next 1 to 2 weeks, we're looking for this to make a move into at least plus 2 ATR, which is going to be good for about 42.70 and change. So that's a move I'm looking for from the market. In the buildup of energy phase, and you do got to be a little bit careful. Inside the squeeze, it's a total chop fest. What usually follows that chop fest is a strong directional move. So there's a timing component to it. But what can be nice during these choppy weeks are those weekly, call it income trades on the iron condors. So I think we covered a few of those on Wednesday. We had the iron condor on the SPX. We bought that back yesterday for about 80% of max profit. And then we got the iron condor here for the NDX, which is the QQQ. That expires today, and I'm thinking we're going to get a good 80-90% there. So they're great. Right? Low stress trades, the market kind of chops itself silly. You put a little bit of cash in your pocket, but the danger of keeping on forcing the issue with the condors is we're going through a buildup of energy, and right around the corner, you're looking for a pretty sizable move, which, holding an iron condor is not going to be ideal at that point. So I think into next week, take the foot off the gas there a little bit with the condors. Much more of a focus on the directional trades, looking for that upside. So as far as open swings, still got Caterpillar trying to wake her ass up a little bit yesterday, but this is a good solid structure. So you got a pretty daily squeeze, get the stacked EMAs. It's part of the industrial sector, XLI. There's a good looking daily squeeze there too. And then to boot, you get the squeeze to the overall market. So still holding on the cat here. And looking for a move into about 248 as the squeeze fires, which would be a brand new all-time high, bringing to about 2+ ATR. So I still like Caterpillar. I think you could even pick up a little bit of Caterpillar here. We're not extended at all, still in the buy zone. So for some industrial plays, I think you take some consideration the cat. Triple M here I think still looks beautiful. So I don't have a position here. It's the same setup in the same sector as Caterpillar, so it's basically the same trade. But I think if you want some exposure, Triple M looks pretty good. I think for a move into about 208. And then you got UNP, which between the three of them isn't the cleanest, but regardless, it's a pretty good looking daily squeeze. It's part of the industrial sector. It should make a move towards the upside if the market moves. But between those three, Triple M is a little bit cleaner. You got stacked EMAs, and then Caterpillar, same scoop over there. So holding on to Caterpillar, but then for the tech stocks, and I'm not sure if we mentioned this, if we covered this on Wednesday, but this market feels so much like the market back in March and April. From the perspective of, back in March and April, the SPY looked great. It had a daily squeeze, it was choppy, but it kept that bullish structure for a while, where the Qs, if we look back to March over here, The Qs were getting beat down. So S&P 500's up here squeezing away, looking good, while the Qs are getting smacked silly. Once you regain structure, though, the SPY already looks good, but now the Qs get back above the 21, they go into their own squeeze, they get the stacked EMAs back, now everything's lining up. The SPY has a bullish structure, the Qs have a bullish structure. That's when you can get some really nice upside. So the Qs look so much better here on a daily chart. We did a great job this week of holding support above the 21. Histogram turns positive. We do have a daily squeeze, and we got our stacked EMAs. So right there with the SPY, Qs look good, looking for the same move. I'm moving to new highs right around 2 or so plus ATR. So if you want to get a little bit of that, Google has been my pick here. And with Google, I really can't suggest you grab some Google now. It's too close to being extended. If you get a little bit of a flush here today or next week, you want to get long as close to the 21 as possible. Because we're looking for the move into +2 to +3 ATR, getting long at the 21 gives you the most upside. You come jumping in here into Google, though I do think it continues to run higher, there is a potential you come chasing it, so to say, and you got to sit through a pull back to the 21. So I don't think you chase Google here, but we'll do a quick little peek at that position. So by far, Google's my biggest position right now, and got the June 18th expiration. Where are you at here? June 18th expiration, got the short strikes on that put credit spread at 22.90, bought the 22.70s, and as far as open profit, that's what that's looking like. So Google looks good here, but for other tech exposure, can we get some Facebook? I hope some of you listening in got some Facebook, because this is textbook. Squeeze, stacked EMAs, she's a beauty. But it already made the move I think you're looking for. So I would not go chasing Facebook here. If you've already got some Facebook, maybe you got a little bit more here. Take consideration to taking at least some of your profits off the table. If I had to bet, I think Facebook goes higher. But in terms of probabilities, you find a squeeze, you get long at the 21, you take profits on the push around 2 to 3 ATR, and you rinse and repeat that. So Google and Facebook, super strong. They're leading tech right now. I would put them in the category of a little bit too extended. So that leaves us with Apple, Amazon, and Microsoft, which Apple's going to be a no from me, dog. You do have a squeeze, but you're under the 21, no stacked EMAs. Here's the way I look at this. What's Apple's issue? What's the problem right now? The Qs are getting back on their own 2 feet. You got a daily squeeze, bullish structure, stacked EMAs. Google and Facebook are off to the races. So the group itself is waking up, but then here's Apple. Can't even get above the 21. So to me, that's pretty lame. So I'm not looking for anything in Apple, though it goes higher if the Qs go higher. Where you do have a much better looking structure is in Microsoft. So Microsoft, you've got a daily squeeze. Histogram looks like it's about to turn positive, so good shift of momentum. Currently holding the 21, and here you got the stacked EMAs. That's a good, clean setup. Now taking into consideration the Qs are squeezing and the SPY is squeezing. We want to look for these kinds of setups because you might have that wind at your back there. So I think Microsoft is pretty solid. As long as you hold support at the 21, I think you can look for a trade here, looking for a move into, call it 260-ish, right around +2 to +3. So Microsoft is interesting, and Amazon's also a toughie here. If we start with a weekly chart for Amazon, this is perfect. Other than the fact it's been weekly squeezing since August, so we're almost going on a year here, the weekly squeeze does have a bullish structure. We're holding the 21 for now, got the stacked EMAs, so the weekly looks bullish. The 3-day chart, this looks bullish as well. Holding the 21, got the squeeze, got the stacked EMAs. So there's 2 bigger time frames that are pretty clean, but the daily chart, this still leaves a little bit to be desired. We're only 1 day into a daily squeeze, very much like Apple. It's having a tough time getting back above the 21. And again, take into consideration, the Qs are looking good. The Qs have made a move back above the 21. They look bullish. They got the stacked EMAs. Google and Facebook are partying right along with it. Microsoft is to an extent. But our poor pal Amazon here, can't even get above the 21. So you don't have stacked EMAs. You got a 1 day squeeze. the daily chart isn't the cleanest. So Amazon's a bit of a toughie. One thing you do want to take into consideration, from one perspective, if we can get back above the 21 EMA heading into the long weekend, I think that's a positive. But the other thing you want to look for here are lower time frame squeezes. And there's a really good looking 4-hour squeeze on Amazon. So I do think it's got the potential to do one of two things, which isn't really a profound statement. I do think if the squeeze fires short, you're probably going to retest those lows. I think that's a little bit unlikely. I think what's more likely here is that we do get back above the 21, right around 32.60. Then the 4-hour squeeze continues to develop. If the 4-hour squeeze can fire long, I think that kind of kickstarts things for Amazon's move to the upside with Qs. So if you're going to be looking to play Amazon here, your weekly chart looks great. Your 3-day chart looks really good. And the daily chart is still a little bit sus. So I think you wait for at least 1 or 2 closes above the 21 and then gauge your entry with a lower time frame squeeze. If you look at Google or a Facebook, they had the good daily structure, but most likely here, lower time frame squeezes got the party going. Then you get the big push. So I think for tech stocks, you wait for a pullback on Facebook. I don't think you get it. You wait for a pullback on Google. I don't think you get that either. And then that kind of leaves us with Amazon. Good looking weekly, good looking 3-day, kind of a suspect daily chart. But I think you can look for some there. And then for Microsoft, this is pretty solid here at the 21. So those are a few things I'm focusing on here. So far it's been a really solid week. Did have a couple of short positions on, which did not work out. So we had a call credit spread here on Hubs, which we bought back yesterday for break even. So, as you got the daily squeeze and you're under the 21, you have no stacked EMAs and you have a negative histogram, that's setting up really nicely for a pretty good flush. However, this market is strong. So once old Hubs here starts to show signs of exhaustion, or all the bearish momentum is coming to an end and gets back above the 21, it's not really something I want to short anymore. Not in the face of a squeeze in the overall market. So we sold that spread at 530. We bought her back at 530. So no blood was drawn on that one. And then we did take a small loss here on Datadog. You son of a gun. So we took the dog out behind the shed. Was looking for this weekly squeeze to fire short. No stacked EMAs, under the weekly 21, negative histogram. That's a bearish structure. And that's a structure that, if the market cooperates, is good for a pretty nice flush. However, market keeps grinding higher, so what does Datadog do here? Signs of exhaustion. The bleeding is coming to an end. Back above the weekly 21, much better structure here. Not something I want to be short. So break even on Hubs, small loss on Datadog, and for open positions, that leaves me with some Caterpillar, that leaves me with some Google, and then I got that Condor here for NDX, which probably going to be taken off in the first few minutes. But that's a focus right now, my friends. This is that moment in time, especially as a swing trader. We don't get too many of these a year. And I'll be the first one, next Monday, next Wednesday. If this falls apart, then I'm dead wrong here. But in terms of probabilities, we only get a few of these a year, where the S&P 500, the QQQ, small caps, the Dow, every freaking sector, and the individual stocks are in daily squeezes. That's when I want to get a little bit aggressive and really look to move the ball forward. So that's my game plan. Give her 1 or 2 weeks here, but I think based on the structure, looking for these squeezes to fire, and whether it's Caterpillar, Google, the Qs, etc., you look for a move into 2.5 ATR, you take your profits into the strength, then you get the heck out of the way there. I'm looking at a few questions here. We got a good 10 minutes, so let me get caught up here on this chat. Yeah, we'll see, Andrew. We'll see. In terms of utilities, let's check that one out. Andrew, good eye. Good eye. Now, I would say it's still noise, because that +1 to -1 ATR is noise, but I like your focus. Now, I know a lot of you are in the options room where you're kind of familiar with my pre-flight checklist. If I'm going to go long a squeeze, it has to have the positively stacked EMAs. It's just that simple. If we don't have the positively stacked EMAs, it's not 100% clean. I'm not going to go long there. So good observation there, Andrew. And I think we got a weekly squeeze too. Always check out the weekly charts because they will give you a bit of a bigger picture perspective. So a good example is the Qs. The daily charts on the Qs were breaking down. So they lost their stacked EMAs, negative histogram under the 21. They were looking pretty ugly, and you can short that move. There's potential there. But what the weekly chart was telling us was be a little bit careful. Play it to the downside, but we might just be pulling back to the weekly 21, which makes a little bit of sense after pushing a good 2 ATR on a weekly chart. And if we hold support there, you might chop for a week, 2 weeks, 3 weeks, but you could turn the corner. So I always like to check out the weekly chart. If I look at utilities, the daily chart is a little bit suspect, but I think it holds its ground as long as it's above that weekly 21. A move under there, then you're looking to short that bad boy. I see one of you calling out Tesla. Nice bounce this week. So this is very much like Datadog. I'm going to base an opinion on structure, and then I'm 100% comfortable changing that opinion once the structure changes. As of right now for Tesla, it's just not something I would want to go long. The weekly chart, we're still under the 21. Tesla's a toughie, though. Tesla's a toughie. You're under the weekly 21, but this week we see signs of exhaustion. So the bleeding is coming to a bit of an end. You don't have the stacked EMAs. So in terms of going long Tesla, I think you can play it for a move up to 650. Once we get to 650, be careful. She's a beast. If we get back to the weekly 21, we rip through the weekly 21, and then we hold support. Good job of kind of avoiding a big slippage here. If we do go back to the weekly 21 and get rejected, then you can see an ugly flush. So I'm going to be a little bit patient here with Tesla. My first kind of mindset is wait for the bounce to the weekly 21 and then short it. But I want to see what it does once it gets there. So the weekly chart is a little bit mixed. And in our daily chart, this is not the prettiest daily chart. Negatively stacked moving averages. That's not good at all. So for me with Tesla here, I wait till it gets to 650. That's your kind of big line in the sand on a weekly chart. And then I make a decision from there. But this should, good lessons here. Breaking down, ugly. It's tough to short when the market is doing what the market's doing. So thinking in terms of probabilities, even with a broken down chart, S&P 500 fires a squeeze to the upside, runs 2 or so ATR. QQQ fires a squeeze, runs 2 to 3 ATR. Tesla's probably going to benefit from the wind at its back and move higher. So I think it's one we'd be patient on. And no biases, right? I love going long Tesla. I was long Tesla over here because of the structure. Long the 21, take profits on the push. The structure has changed a bit here, though, that's for sure. Mr. Blue Chip, as far as the internals, for tick and ADD, we'll have to wait until the market opens. And some folks don't consider VIX an internal. I guess in my mind, I kind of consider it an internal. So, volatility is an interesting discussion. If we look at the VIX here. So we know what these big spikes do. VIX runs +2 to +3. It shakes the market up a bit. When VIX is down under the 21, it's pretty smooth sailing. However, think in terms of like human emotion. When volatility is so low, kind of down here at the range, it's really easy, especially for inexperienced traders, you kind of get lulled into, call it complacency. Market's holding up, we're either flat or we're going higher, everything looks good, everything looks clean. That can last for quite a while. If you look over here, VIX was dead for all of April, most of May, but you do want to keep an eye around the corner here. So hopefully this makes sense. This is good for the time being, but it could lull traders into complacency. So I think the major thing to watch for here is if the market fires that squeeze and we make that move into 2 or 3 ATR, once we start to see signs of that slowing down, if the volatility index then spikes, that's when you can get a really nasty rollover. Everybody's margined up, everybody's caught long, but once we hit that high probability extension, that's something to keep an eye on. So it's good for the time being, But you do want to pay close attention to the VIX at these lows because that is where you're going to get a big spike from. I think we're a few weeks away from that, though. I think we're a few weeks away. All right, see what else we got here for questions. Yeah, Russ, I couldn't agree more. SPG looks great here. Now, I wouldn't get long because, I mean, that's the move I'm looking for. Find that squeeze, get long to 21, take the profits into the push. But Russ, this is perfect in terms of high probability swing trading, all on its own, right? Ignore the sector it's a part of. Just take this setup here for what it's worth. That's a high probability